Good afternoon, everybody. It is 12:59 in the afternoon on this rainy, wet fifth day of I was going to say August, September. Okay, I don't need to hear myself talking. Blip. Okay, so as we all know, if you kind of woke up this morning, I usually get up around 5 in the morning, Central Standard Time every morning, and I do a little bit of looking at what happened during the Tokyo and the London sessions and the Forex markets, take a look at what happened in cryptos. So this morning when I was taking notes, I watched live as all this stuff fell through. I had some stops hit, which is good actually. Went into some profit on some, and we really had just a big fallout here, which is actually not anything different. In fact, if you remember yesterday, we were talking about this possibility of a move and an anticipation of it. Actually, the anticipation was more to the upside because there was such bullish pressure going. But this has been kind of an interesting move, and I want us to take a look at it from two perspectives. So for whatever reason, TradingView will draw the regression channel. You know what? Maybe. Regression band. Oh yeah, there it is. And extend to the right. And we are down below 7. Okay. Well, on this one, I gotta wait for that to pop up. Anyways, on TradingView's data here, if we look at the daily, we are sitting right above the a key pivot price area. We're in that value area along with the top of this regression channel, but probably more accurately on the 1 hour. If we look here, we are back inside this channel. So we are back in the bottom value area. And as it says here, the big test for Bitcoin, the first kind of test that we got that would be moving higher was last week when we saw prices get up to that 7K pullback to the mid here, and it started to test this before we moved up higher over the holiday weekend. And then we see this is actually really just a minor pullback. Still waiting for your mail with your address. 1 second there. All right. And so we've really seen a pretty big drop from the 7,400 area all the way down. Now, that is actually not something that we were really surprised about, because as we got up to that 7,500 area, we knew that we would see some pressure there. The short interest had me thinking a lot. Well, it was really making me a little anxious to see what would happen up here, because certainly if we would have gone to 7,500, that short interest would have been in some covering conditions. We would have had a nice short rally, but of course that did not play out, and we just see that we've returned back into a value area of equilibrium, at least in the regression channel. Now, taking a look at it from this perspective here, so here's the square 52. Here's that mirrored fold back. If you remember me going over this, I'll do this again in case there's anybody watching the recording and hasn't seen this yet. A mirrored foldback pattern is just a repetition of the prior swings and the prior price action, not the exact price levels. We are looking for a repeat of the prior price action swings. So if I'm looking at this, I see major swings of here, 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 and so forth. Okay, so we can see where those major swings are at. That is what we are looking to see prices do. And we can see that for the most part, it does follow that pretty well. In fact, what I could probably do, because we've had the two swings form and the price action kind of follow it, is I could probably squelch this in more. But the trade idea that I did on this was back on June 18th. And here's the trade idea here. Actually, I should probably link that in chat. So there's the trade idea that I did on June 18th, published on TradingView. This is, I mean, just so you know that this isn't like me forming this today to show you something from the past. I did this on June 18th. That's TradingView's published date. If you've ever used TradingView or looked at ideas, you know we can't go back in time to change these. This is a truthful, honest analysis from the past that is actually playing out right now. We get to see this theory working out live. And so if I hit the play button, again, I apologize for folks who have seen this before, but I know that there's some folks who haven't. If we hit the play button, we can see that the structure of this move, the mirrored fold back pattern, is actually playing out very well. And what I was saying about the rollback here is I could probably squeeze this in a bit to make it a little more, you know, in time with what we actually have had happen. So, all right, there we go. Now, so this is the drop that I was looking for, that we should be looking for. We should be looking for a drop like this from this area here to down here. That is the kind of the drop that we are looking for. And that is what we have playing out right now. I don't think we would get it to test a lot lower because, I mean, I might have messed up the... Actually, you know what? Let me undo that. Oh, I think I did already, didn't I? No, never mind. Okay, I'll just leave it at that for now. But we are definitely within that value, that pullback value area on here. This is exactly the kind of situation we want to see have played out. We knew that we were getting to the highs here. I thought that we would probably come up to test the 7,700 if we got that short covering rally, which we did not. So really, the move here is one that we were expecting to have play out. Actually happened a little earlier than what I thought. But that's fine. It doesn't move exactly in the same Fibonacci ratios, doesn't move at the exact price levels, but it does mirror these prior swings fairly accurately. So what does that mean going forward here? Well, we could experience a little bit more pullback, maybe down to 68 or 6,700. But that move should be pretty limited. In fact, we could measure... Dang it, this is really... Okay, I have to do it now because it's bothering me that I can't get the... Right, I want to get the angle from the actual ratio here. And from there, boom, flip. And we go back on there. Oops. Okay. Now what I want to do is I want to get the angle from this pullback to this higher low here. I'm going to put that on over here. So yeah, we are within that zone for actually observing it do a pullback back higher. That is more than likely we see some consolidation with maybe a couple incidents of some lower prices, but what this is telling us is that in, let's see, 1, 2, 3, 4, 5 to 7 trading days, we should start to see a resumption of the uptrend. So this is actually the big test area, is if that structure, if that path that we have been following ever since June 18th, if that is going to continue, then we need to see prices really not go below the 6,300 level. That would be kind of the ultimate downside area. The swing low here, this could be the bottom of the swing low. In this regression channel, though, if we get a fall out here below, it would probably be another fast move, definitely to at least 6,400 or so. because all this really is this right here. This is just a bear flag. This is bear flags are flags and pennants. If you ever hear them called that, they're just continuation patterns. They're inverse moves off of a larger move, but then they just end up being pullbacks or throwbacks. There is a difference between pullbacks and throwbacks, but everybody calls them pullbacks, and that's what I've started to do too. So looking at the price action right now, a pretty steep drop. Lots of volume involved. We are sitting below that 7,000 value area. It'll be interesting to see if we actually do hold there. Some of the altcoins have been hit pretty hard. Cardano was actually down at least to near 16% at one point. I haven't bought anything today except for Cardano. I loaded up quite a bit of Cardano because this is the dollar pair, but on its Bitcoin pair, Cardano is near the open of what it opened on Binance. On Binance, it opened at, it closed. The close of of the first day is at 1204, and it's sitting at 1297. And we can see the dramatic rise that it had, and this is actually one of the only non-crap coins out there because it's a platform coin and it's got the ATMs are coming out at the end of this year, I think, beginning of 2019. Last part of 2018, beginning part of 2019, Japan is getting Cardano, ADA, ATMs all over the place, and I think they're going into some other Eastern countries as well. So that should be a big booster here at some point. But Cardano, I actually picked up quite a bit more. This is one of the coins that I hodl quite a bit. But that one Cardano's had a big thrust down. Ethereum, this is interesting. So Ethereum's chart, well, Bitcoin, the market geometry here just got halted, but we're finding support on this pivot angle here, price pivot, which is good. But Ethereum, this did not play out. I thought if we were going to be moving higher, because we were just forming a bullish flag here, that we would see a pretty stiff rise up and out of that. But the price action really did not want to go and entertain any trading in this arc. It really stayed right outside of it. Ethereum is pretty sensitive to, it seems to be more sensitive to the arc and price relationships than it is to the angle and price relationships. I don't know why that is. Some instruments are just that way, but the arcs on Ethereum's chart in its market geometry, and this is the law of vibration. Ethereum is very, very sensitive to these arcs. It doesn't like it. And if you've never seen this kind of stuff before, think of arcs are like force fields or shields, like any sci-fi stuff like Star Trek. So when prices approach these arcs, it wants to get away from it really fast. So it acts like a projectile where as it goes to it, it either is going to bank off of it, or if it goes through and it hangs around, prices don't really want to hang around inside the arcs very much. So generally it's not really a rule or a law. It's just the behavior is that if it gets inside the arc and whatever direction it finally breaks out of is the direction the price action will more than likely go. Again, that's not always true, but anyways, that is what we see happening here. Price action was trading up against the arc, and we found a lot of ugly resistance here, followed by some continued selling. Now we are actually, Ethereum's one of those coins that is trading below where it was a year ago. So if we look back on September 5th of last year, the close of that day was at 320. So we are trading below that. And really, if you look at Bitcoin, Ethereum, or any crypto that has been around for greater than 5 years, if it is trading below where it was year over year, so year to date, not year over year, but year to date, then those are generally great buying opportunities that show up, especially if it's in one of the major pairs, especially if it's in Ethereum, Litecoin, Bitcoin Cash, or Bitcoin. If you see it trading below where it was trading year to date, those are generally pretty good pretty good buy ideas, because what is it? 73% of the time, cryptocurrencies are trading above where they were trading year to date, and that's a really high positive expectancy rate for something in a trend, because this is a trending market. This is a long biased market. And so anything that is trading below its year to date is a really, really good accumulation opportunity. And here's the thing. I get excited about days like this. I'm probably one of the few people that do. And traders should be excited about days like this, because I was looking at the TradingView chat. I love TradingView's chat because it's kind of like it's its own indicator. When everybody's writing things like this, I scratched out the guy's name and stuff. We don't need to have his name all over, but he says, "I am seriously sick and fed up with Bitcoin and crypto." That was a resounding, people were just sick of it. TradingView chat, I would not advise anybody who is new to trading to participate in any type of forum or Twitter feed, because you will get sucked into the negativity or the positivity, and that does affect how you trade. One of the first things I learned when I first started trading stocks, which is a really bad thing to learn how to start trading, was that avoid the news, avoid forums, avoid stock twits, avoid anything where people were interacting socially over the stock market or trading in general, because all you end up doing is doubting your own analysis and believing strangers. And if that rings true to somebody, that's probably because that's what you do. So, seeing these kind of comments, I am seriously sick and fed up with Bitcoin and crypto. I love to see these, because that is a great sign that things are about to turn around. Crypto charts are just a roller coaster of emotions, and they are, charts are just physical or visual representations of the mood of the participants. And so when you get when you get long drawn out phases, you get people who aren't really pissed off. They're more like, "Oh my God, this sucks. This is just blah. This is like a long depressed mood." And this is where the cutters come in, as days like these. They just can't stand it anymore. And they just feel horrible, sell their positions, and so forth. But again, I was saying that I get excited about this because this is a long biased market, and I have no fear of this market capitulating. And the thing is that as a trader and an investor for cryptocurrencies, I love days like this. Think of it this way. Let's say, I don't know, if you traded vehicles. That's not something that's a good example, but okay, like I have a Toyota Tundra, and I drove by the dealership and I saw it when I wanted it, and I was like, I don't know if I'm going to wait for it to go down in price. And then the next day it's down 15%. Why? I'll probably go buy that truck. If something's a 15% discount, I don't know why I wouldn't want to pick it up. But for whatever reason, with trading like cryptocurrencies, whether it's cryptocurrencies, Forex, or stocks, when we have something that we want and we want it to rise in value, we want to get it cheaper. For whatever reason, we get pissed off when we see it cheaper, even if we have it already. And so it comes down to this loss aversion thing that humans do. It's the reason why humans, and maybe you've never been able to figure this out. Why do you hold on to losers for long periods of time and cut your wins short. That's one of the common things they say new traders do, but that's really all traders do that. I'm guilty of it. Why do we hang on to losers and let our winners get cut short? Why do we exit profit early, but why do we let our losers run? And that's just down to human psychology. We are loss. We avoid loss, and we are not comfortable with losing money. So it's more comfortable to sit through the pain and wait for the hope and the possibility that something is going to recover. So, excuse me, that is just how humans are. But if we're looking at Bitcoin market, I mean, yeah, if you have all your capital tied up already, then probably does suck to see it traveling down and just not doing anything. But if you keep some capital open for days like this, then, which you don't keep some powder dry for days like this, then these are exciting days. Okay, so where do we go from here? What is the move? If we look at the altcoin market, so let's look at some of the ones like the Bitcoin 5 or the Coinbase 5. I call them the 5 currencies the 5 cryptos that Coinbase came out, was that 2 months ago or 2 months ago, and said that they are considering adding to their platform. That's Basic Attention Token, XLM, or Stellar Lumens, OX, Zcash, and Cardano. And if we look at those altcoins, what do we see here? So I'm looking at the daily. Yeah, we are near the all-time lows on the dollar equivalent here. We are we're just a hair above the low of the year, and actually the low period, I mean, with the exception of the open, or the first trading day of this, is we have let's see, 83,000 rather, and we're just slightly above that. We're almost at 9 cents, so or 8, yeah. And we've basically wiped out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 to 13 days worth of an up move was eliminated within 15 minutes of trading. Oh, cryptos, they'll sting you. They will definitely sting you. So that's what we've got going on right there. Now, as far as lower moves, I mean, yeah, that could happen. We could see it hit 79.10. I think we get a waterfall if we were to do that. But yeah, I mean, Cardano's down. Some of the big gainers that we've had over the last few weeks is Walton Chain. This is actually a non-crap currency too. This actually has function and utility. It's a supply side. It's a supply management, and maintains the integrity of company supply chains. So this guy's actually holding above this prior trend line. It's actually holding it very well. That's something to pay attention to. Nano is getting a structural. I mean, it was due for this pullback anyways. These harmonics are based on musical notes. These levels here, these are the do, re, mi, fa, sol, la, ti, do. Yeah, get LTC while it's cheap. Yeah, it's unfortunate about Litecoin because I'm still really bullish on it, but I mean it's had, I don't know what happened. The Litecoin group is just really kind of fiddle-fuddled, ever since March with trying to get. We haven't really been pushing mainstream adaptation, which sucks. But okay, looking at Nano, we broke back down below the arc. We're pulling down here. Nano more than likely is going to catch another rise at some point here, but looking at it to retrace down to at least the 32.95 area. I actually have resting orders. I'm pyramided down from 33 down to I think 3,000 even, maybe, I don't remember, but Nano more than likely going to catch a bid at some point. Basic attention token down 15 to 16%, and it is sitting at these flat levels here. Has really not moved much at all. Oh, with LightPay. Oh, you know what? I remember what happened with it, but I don't remember the specifics. I think maybe that was something to do with like Visa or MasterCard. One of them didn't want to. I mean, it's Visa and MasterCard, blockchain in general, the underlying technology of cryptocurrencies is a threat to their business model. And companies like Stellar Lumens and Ripple are cryptos that are designed specifically to help them transition into this new infrastructure. And so instead of them having to, convince shareholders and stakeholders to, throw up a whole bunch of capital to investigate and build a new transition into a new transaction technology, they can just very easily onboard to. I mean, anyways, coins like Stellar Lumens is actually really, I think it's going to overpass Ripple as far as adoption from companies, and Ripple's trying to target banks more than anything, and banks they'll develop their own thing and make Ripple moot. Plus, Ripple, I know they say it's not an unregistered security, but I don't know how it isn't. Okay, so basic attention token, it's sitting at these real almost a year-long support level. Nothing really to talk about there. In fact, we should probably look at it from the Bitcoin perspective, because that's going to look a little different. Not terribly, but that's what we've got going on there. Broke through that triangle, sitting here at the 2818. OMG was a trade idea from last week that was pretty profitable, but now OMG, we are definitely looking at pushing possibly the August of 2017 lows, maybe. What is the fib ratio? Ooh, quick thing about fib ratios you probably never hear anywhere else. One of the main contemporary technical analysts, and she's a phenomenal, she actually has a book on Fibonacci, Constance Brown. She is like a wizard in technical analysis. She's one of the, her stuff is in the chartered market technicians material. She's just a really fantastic analyst. And she made a point in her Fibonacci book about Fibonacci retracement. So basically what you want to see in your Fibonacci retracement, so if I'm retracing this move here, so I'm going from a low to a high, I want to make sure that, well, if we look at what the default looks like, we see that the 618 ratio is up here. We actually want the 618 down below. It's the reverse of what you are taught. Oh, that's not what I wanted to do. So these are the actual levels that you want to see. You want to see the 618 down there. Extend lines. Yeah, just wanna, oops. And there's another fib level that you should add because it's a great reversal level. It's the 882. Oh. Why aren't you showing up? Well. Oh, you know why? That's right. I'm thinking of doing this in another piece of software. 882 Fibonacci level is a strong reversal level. In a lot of Gartley harmonics, 882 or 886, that is a specific Fibonacci level that prices need to get to in order for some of the Gartley patterns to have the validity of being formed. Some Gartley patterns have a pretty wide Fibonacci ratio, and others don't. They have really strict ones. I think the shark is one that I can't remember off the top of my head. I have to look. So we see OMG here sitting at an 882 fib level. Basic attention token is sitting at these swing support zones. Neo is Neo is looking pretty ugly too. The whole thing. Do I offer any trading to help become a market technician? Oh God, no. No, that is no. That'd be like the chartered market technician is the technical side of the analysis coin, and then on the other side of the analysis coin is the CFA. That's the chartered financial analyst. So they are both very difficult. My brother and I have 3 brothers and 1 sister, and my brother, he is a CFA, and we've been like total opposites our whole lives. I mean, we love each other and get along great, but he was big into like football and wrestling, and I was into music, and I did track and tennis, I did football a little bit too, but I didn't have time to do it. So my brother and I had different interests our whole lives, and then it just is weird that he became a CFA and I did not. Went towards the CMT. So that's been a thing that we joke around a lot about. But yeah, there's a lot of, there are more CMTs with CFAs than there are CFAs with CMTs. Okay, this is a Block Mason protocol. This is down in the doldrums here. The thing is if we get a little whiff of a recovery, any of the coins that are trading at these new all-time lows against their Bitcoin counterpart or their dollar counterpart are going to be really, really great things to pick up. So this right here, like blockchain protocol, checking out these lows here. I mean, this was a pretty good trade last week, 2 weeks ago. ZRX, this is OX. This is one of the coins that Coinbase is looking at. You know, it's trading at the bottom here as well. I don't know if we'll get an actual another leg down. That would be, I mean, that would follow the foldback pattern a little bit to see it actually trade down a little bit farther, but it doesn't go very far. Just looking at the whole market here, it'll be interesting to see if Bitcoin can recover back up to 7,000 and hold that. In fact, and I can't wait for the market to get to 500 billion and above, because then we actually get charts that all move. Well, they don't all move in the same direction, but because Bitcoin has such a dominance over the whole market, it's basically we're trading a Bitcoin ETF. Yeah, if we get back above the 6932, so 6932, this is a 6/8 inner harmonic range. The any red vertical lines you see on my charts are they're pivots, and they're not the same kind of pivots that you think of when you think of pivot points, but they're harmonic pivots, and prices generally get rejected off of these levels when they approach them from the high or the low. So if they come down to them, you often see prices rally back up. And we'll see if that is the case here. But the volume's been pretty heavy over the whole morning. So if we look at 5-minute chart, we can see that these were all done on big single sell orders. This is a more than like this could be. Oh, the other bullish component here is this could be the inverse of the bearish BART patterns we've been getting. So if you know what a BART pattern is, it's it's kind of funny. I'm just gonna find an image. Where are we at? So this is the BART pattern. All right, because it looks like Bart Simpson's haircut, followed by steep, a very bullish engulfing. Just really, I mean, usually the close is the high of a bullish BART, followed by choppy trading, consolidation, or fading. And then we have the bearish BART candlestick where the close is usually the low. And so this is a BART pattern. And these are bearish BART patterns. But what we could be starting to see, and this is why I was calling this the key, the big test, is that if we're going to see that repetition in the price action, if I can figure out what chart I'm on. Then we should see bullish BART patterns show up. And so bullish BART patterns will start off with sell-offs, followed by consolidation or drifting higher, and then we'll get a bullish BART candlestick to complete the inverse BART pattern. Now, that and this is the kind of conditions that we're in where we would see that possibly happen. So we could see it go, we see it, trade like blah blah blah, in here, forming the little hair spikes, and then finally we get the bullish BART pattern that shoots back up and above. So, excuse me. That is the price behavior we would observe to see a bullish inverse BART. I don't know why my throat is so dry today. All right. As far as what could happen later on this afternoon, I don't know if we'll see a lot of movement. I mean, a lot of the activity is probably pretty much done for the day. The fact that this happened in the overnight in the EU session, near the end of the EU session, or near the near the end of the London session, but going into the lunch hour, late morning and early lunch period for the London session, there is generally quite a bit of volume that happens on that area. So this could very well be the set period that we're gonna watch have happen here, and then. If you want to see how the behavior of like how the market makers really do this, it's pretty simple. So, I mean, you have one or two people or a group or whatever who sell a large chunk right here. Okay, and that's a big drop, and that's enough to scare retail traders. That's enough to get them back in, and then, I don't know if this was actually this. If this is a big holder or not, but the fear just feeds itself and it just drives it lower, and that is exactly what in a micro cycle, this is a distribution followed by a panic. On a micro cycle, that's what we see. It's just we have distribution going on. Actually, distribution was going on back all the way over here, but distribution, and then panic is where it's sitting at. And then once we see consolidation for the next move, that's just how these things go. So it doesn't take a lot for a group or a individual to push the market down like this, especially when there's not a lot of trading going on. I mean, there's not a lot of volume being traded at 4 a.m. and 5 a.m. Central Standard Time. There's just not. And so because there's not a lot of liquidity, it is very easy to push things in a certain direction. And then that just kind of hits people's stops. And the structure here was made, I mean, it was a really good trade, actually. I mean, we had this rising wedge pattern, and, you know, that's great. Rising wedges are indicative of sells, or of they're a seller, they're a bearish pattern, a rising wedge. And more than likely, because rising, I mean, any pattern like that's very easy to spot. People have their own stops sitting down here, and it just triggered a wave here, and then followed by people market selling around here, and now we're just kind of hanging out in the 6,900 zone. Remains to be seen if we'll actually get above there. We'll have to watch and see. The altcoins, again, they are looking pretty ugly and looking pretty yummy to scoop up. There's a lot of volume pouring into a lot of these alts. In fact, I want to look at what the whole altcoin market looks like. I bet it's pretty bloody. Oh, you know what? And then I love cryptocurrency news sites, because at the end of the day, we'll get those articles that are going to tell us what already happened, and that's about it. There's no other substance behind it. It's just Bitcoin lost $16 billion of value. Actually, it's more like, yeah, 17 billion in market cap wiped out in about 30 minutes is really what we had happen. So that's according to CoinMarketCap. Bitcoin's dominance sitting at 55%. That's pretty huge. It's easy to move a market. It's on low volume with a... Where do I find the latest crypto? My Google feed that shows up. I get... actually, it's one of the things I do like about my phone is that I'll get... okay, like Business Insider just told me that Bitcoin drops sharply and suddenly, and now cryptos across the board are getting slammed. Who writes this stuff? I want that job. I want that job where I just write what is happening, and then I mean, that is what the news is, I guess, but I want that job. Let's see, Captain Marvel. No, that's this. Crypto market sees sharp decline. Coin Telegraph, I like. Coin Clarity, I write for Coin Clarity. CCN's great. Yeah, there's a lot of good sites out there. Trying to think, what's the other one CCN, Cointelegraph, and CoinDesk. Yeah, CoinDesk, CCN, and Cointelegraph. Those are the news sites that I like. And really, I mean, so there's not enough professional news folks out there and analysts that are going to be doing any real substantive reporting on anything other than the price action or some news that is you know, that you would get just from like from the Associated Press, like the SEC and the ETF stuff. This is such a young market still. It's only 10 years old. That's not even in the start. We're still in the starting phase. We're not even in the nation phase. We're still in a little itty bitty tiny beginning of nothing. This is, I mean, fast forward in time. Okay, I'll look at it this way. Look at the Dow. Look at how long the Dow has existed. Look at how long the gold market has existed. Look at how long the futures market has existed. And 10 years is drop in the bucket, literally. It seems horrible and long, especially if we've been in this market for a while at the beginning, and that just makes us better traders, I think. So looking at the future price action going by this, I mean, really, just look at it this way. This activity right here, let me hide that. And let me hide this. Well, that works too, I guess. Well, whatever. Just look at this area right here. Let me highlight it. Well, that is not a highlight. Where I have that box drawn around. Okay, this is going to bother me. Why is it purple? I don't know why that's not filling. It's weird. Okay, so the black lines, that's the mirrored foldback. And just look at the trend of the price action that we're looking at. So these pullbacks, and this is what I like to use in my forecasting, is I like looking at things like mirrored foldback patterns because they show up everywhere. And they're very easy to trade as long, you know, if you're not trying to focus. If you're a swing trader, these mirrored foldbacks are fantastic. They're just awesome. And if you're a swing trader, you don't have to worry about specific entries. You just have to look at the swings and you know, just kind of eyeball the ratios if you want to. Some people are more, you know, scientific about it and want to measure out areas and get the where's the natural deviation point from this swing related to the current price. I mean, you can get really technical, and if it's a headache, I don't like it. But mirrored foldbacks, if we're looking at this price action repeating as far as the trend, then we're in an uptrend, and this is just part of the pullback pattern. These are just part of the swings in this move up. And so looking at it, this is like a great. This is why I had stops sitting below near that top of that regression channel and above it for profit targets that never reached. But when we get down to these swing lows, then I mean, this is if you remember last week and the week before, this is part of the whole buy the dip process, and you have to have the balls to want to get into something when it is down. I think that's a hard thing for a lot of new traders to do is buy something when it's cheap, even though that is what you're supposed to do. Okay? Bitcoin has not broken the lows of the year here. It has followed the foldback pattern pretty damn accurately since June. And so there's nothing telling me to be overly concerned, where I was happy to pick up some Cardano today, and that was the only thing I've picked up so far. I want to wait till we get past 3 o'clock in the afternoon Central Time to pick up anything else. But yeah, limited downside risk. I certainly don't see it breaking the structure here, although, you know, if this is a bear flag, yes, that could actually pull back down farther, but otherwise, just following this pattern here and the black line, then I have a very bullish bias going forward, and certainly waiting for the September dates. If you remember looking at this is just the craziest thing. Did I go over this yesterday? The Venus lines. So September 19th is the next 36 degree division of the longitudinal position of Venus, which happens to be, shockingly, this is the weirdest damn thing. I'm going to say it again. This is the most crazy on the date swing relationship I've ever seen in anything. This is just nuts. But the longitudinal position of Venus at 36 every 36 degrees is a big area where swings are at. So depending what the trend is and our oscillators and all that jazz, September 19th is looking like a swing high area. If I compare that to the mirrored foldback pattern, and I'm looking at this activity over here, and especially because I see that the price action is actually is happening before the past swings. So September 19th is a prime area for me to considering going all into cash and maybe putting some shorts on Kraken, on Ethereum and Bitcoin, because this major pull down here coincides with the date range of this longitudinal position of Saturn. Okay? Sounds kind of nuts. I know. The planet stuff is a little weird, but it works. I mean, where are we at? And for whatever reason, Bitcoin likes Saturn's levels as areas of support and resistance on a long-term time frame. It likes to hold those areas. So, yeah, this is just it's math. it's angles. It's not voodoo doll stuff. So September 19th is definitely the place where I'm looking at a lot of profit to be taken before the next drive down. That ultimately we should experience that next bull ride up. Okay, got 10 minutes left here. Any questions? I'm going to type in chat things I'm looking at picking up today. DGD, more BT, Bitcoin Gold. Actually, no, I'm not going to. I still have Bitcoin Gold, but that has actually been pretty resilient, which is an interesting sign. Did 80 already. VAT, XRM. That's Monero. What else am I thinking of? XLM. If we get a pullback, because XLM actually has been pretty aggressive. What was? Let's see. OMG. Yes, OMG. The best time of day to trade crypto. That is not a... There's really not a great time of day. Back last year in September to December, the best time was really just like Forex markets. It was near the open of a lot of those markets. So you have the Sydney, Tokyo, London, and the New York Opens. Those were the best times. The worst time was when there was no overlap in the markets, and that's pretty much when we're talking about right now. Between 11 Central Standard or 12 Eastern, anytime after 12 Eastern, between 12 and 6 o'clock Eastern time, you're pretty much in the doldrums of the day. So, yeah, those aren't the good times. But I mean, I like to trade from 5 in the morning. I'm here from 5 in the morning till it depends if I get my other stuff done. So, yeah, those are there's a lot of funky moves that happen between the New York lunch hour and then the Sydney and Tokyo Open. Sometimes those are periods where they can move the market a lot easier. I'm going to say that these BART patterns, they don't show up a lot in a very active market, especially when the market cap is higher. That's indicative of volume being higher. Participation is higher. It's much more difficult to move. What's the difference between Bitcoin, Bitcoin Cash, and Bitcoin Gold? Ooh, that's a really good question. So Bitcoin Cash is a hard fork. And so a fork in cryptocurrencies is like a fork in software. So a fork is like branches off. So a hard fork means that it's a separate from the original blockchain. It has the original blockchain, but then everything else after that is its own separate thing. A soft fork is like an update or an upgrade to that blockchain where it's compatible to the current chain. So like Sedgwick and the Lightning Network, those are soft forks. I don't know if you want to even call them forks, but Bitcoin Cash and Bitcoin Gold are both hard forks of Bitcoin. And Bitcoin Cash was meant, this comes down to ideology, I believe. It's like a Bitcoin civil war. You have Bitcoin Cash wanted to kind of put the weight back into the it came down to the Sedgwick debate. They wanted to make the block size bigger. It came down to like, how are we going to make Bitcoin faster, and because it was really slow and it was really expensive. If you traded it all last year, you tried to buy Bitcoin and try to send it to a different wallet or a different exchange, it took forever. And then Bitcoin Gold, this is the reason I like Bitcoin Gold. It's just from an ideological perspective. So you went from Bitcoin itself, which is the fear is that super elites own Bitcoin and they have control of it. Bitcoin Cash was like, well, we don't want that. But the inverse or the same side of that thing happened. It's an oligarchy. It's owned by the miners have all the say. It's ASIC mining. ASIC mining is a piece of hardware that you use to mine Bitcoin Cash and Bitcoin and some other cryptos. And ASIC miners, they're proprietary just for that, whereas other cryptos that you can use regular video cards for, they're much easier for regular people to get. So Bitcoin Cash is owned by China and a whole bunch of big mining corporations. And then Bitcoin Gold was forked to decentralize Bitcoin. In fact, they have a joke on their site called "Make Bitcoin Decentralized Again." And so Bitcoin Gold's entire purpose was to decentralize the process, and ASIC mining is not allowed, and anybody can really mine it. And so Bitcoin Gold is actually more in line with the vision of Satoshi Nakamoto than Bitcoin Cash or Bitcoin, what it has turned into. So that is the difference between Bitcoin Gold, Bitcoin Cash, and Bitcoin. And there's a whole bunch of other hard forks of Bitcoin out there that you can't even keep track of, that are real just basic crap. But yeah, Bitcoin has got an interesting history, and yeah. Okay, I put in DGD, 88 XLM, Monero, QTUM. That's right. Pretty much anything in the top 25, market cap. If it's below, or if it's at or near its lows, and it's not going to crack those lows by tomorrow morning, then I'll probably be picking some of it up. We'll have to see. Yeah. Let me see here. Other than that, yeah, just kind of seeing how this market reacts. Bitcoin. Actually, I want to look at it over here on the hourly. Volume's coming down a little bit. That's normal, but got a lot of buying tails in here. I'll have to see how this goes. If we're, I mean, again, we're definitely entering into that expansion phase in cryptocurrencies. And the more that we get these relief rallies like this, and then we get things like this right here, the more people are getting strung out and frustrated and angry and upset, and they're screaming manipulation. They are screaming scam. The thing is that we don't know a lot about what's going to happen in a market. We don't. Okay? You have no idea what is going to happen. You can do probabilities and predictions and all that jazz like I try to do, but ultimately we have no control over the direction of price because we don't know. But what we do have control of, the most important thing that we have control of, is we get to determine how much money we are going to lose. That is probably the most important part of trading in any market, is that you are in control of how much money you are going to lose. If you lose your entire account, that is your fault. It is nobody else's fault. If you are over leveraging, that is your fault. There are stops for a reason. There are so many ways to protect your position, but ultimately, when you lose money, that is your fault. You can cry manipulation all you want, I don't know why you need evidence of manipulation. It's in every single market. You just have to, it's like living in, Great Britain, and if you get upset, it rains all the time. Well, that is just a part of that environment. Manipulation is a part of every trading environment out there. So, again, you get to choose how much money you're going to lose, and that is the hard truth. And but that is the most powerful tool in a trader's toolbox, is your risk man. I know they always say, what's your risk management, your trade plan? Don't talk about those enough at all. But yeah. Anyways, it is 2:00. My time is up. I hope you guys have a good had a good trade day yesterday. Don't get upset about days like this, or even if it goes lower. Stick it out, because years down the road, when you still trade, you have experienced one of the worst bear markets of any instrument, and you're going to be just a stronger and more emotionally and psychologically mature trader. And you're paying your tuition. That's what this is. So financially and emotionally. So anyways, guys, have a great rest of your trade day, and I will see you all tomorrow. Please don't forget to like and subscribe and all that jazz. So yeah, give a thumbs up too. That'd be great. And the contractors are back. All right. Talk to you guys later. Bye-bye.